Amen.
Thank you very much. Good morning, everybody. Firstly, delighted to be here, and so thank you, Kevin, for the kind invite. It's my first time in Denmark, and I have absolutely no idea what was just said. So, the rest of the day is going to be challenging for me until Knut speaks later on. So maybe you guys can give me a bit of a steer as to what's actually being said. So it's, some of you may have come across me before, but I suspect most haven't. A year and a half ago, I would be massively surprised if someone said I'd be presenting to people around the world talking about Bitcoin. But the context here is, I started my career in investment banking after studying physics at Oxford, and I spent 10 years as a derivatives trader, mainly at Goldman Sachs and a couple of others. I then spent 10 years as an entrepreneur, founding, building, exiting technology companies. But I don't do any of that anymore. I spend all my time on one thing because outside of family, Bitcoin for me is the most important thing in the world. And in October, year before last, I was invited by a friend to go on a weekend away. And he's an entrepreneur as well. He invited 15 of his friends from his life to all travel to Portugal, stay with him for the weekend. We didn't know each other, but he said, "You'll come down, we'll have a good time, you'll meet some like-minded people, but please all bring something to talk about. And you have half an hour, talk about something you're passionate about, and that might be helpful for other people." I only want to talk about one thing. Right, but I didn't know who was going, didn't know anything about them, couldn't make any assumptions. Like, how am I going to, in 30 minutes, get these people to understand Bitcoin? I was like, well, that's not possible. Not possible. And so instead I said, well, after 30 minutes, can I want them to want to learn about Bitcoin? And that's much more achievable. And so I just made this presentation, and it went really well. And they said, you should really share this with other people. And so I went away, I made a video, expected nobody to watch it. I had an X account under a fake account, like anonymous account, like many people do. And I just put the video out on YouTube with no followers on a brand new account, and stuck the link on X under posting this video. And then it's now been viewed millions of times across platforms. And I get invited all around the world to come and speak to Bitcoiners and, importantly, non-Bitcoiners. People who are in adjacencies like finance or health, things where Bitcoin starts to touch on their areas, but they haven't had that penny drop moment yet. And so what I'm going to talk to you today is a slightly more relaxed version of what I would normally do on a conference. Normally get 20 minutes, but today I've got 40, so we can go into a bit more detail. And I'll just run you through, and I'll be around to talk through anything you might want to talk about afterwards. I don't know. We probably have a range of people here, from people who've been in Bitcoin for a long time to those who are just starting out on their journey. But hopefully this is entertaining for you all. All right, let's go. So what's the problem? Too many. Too many problems in the world, and everyone's aware of them. I could have written twice as many things down on the screen here. And for most people outside of the room, they would see this list of issues. They would recognize them. Some might impact them directly or indirectly, but they wouldn't associate them with having a single cause. They'd see them as being unrelated to some degree. But as Bitcoiners, we know this is all because of the quality of our money. And we'll do this, and we'll help explain why that is the case through a simple story. And so imagine we're on this far-off world, and there's hundreds of smart people traveling across a vast ocean, and they get capsized on a deserted island. But this deserted island is resource-rich. It has everything they could possibly need to restart society, but they're starting again from zero. Now, given they know where they're going to get back to, because they've come from an advanced civilization, They have an end goal in mind. And they've also come from a functioning economy, but they're starting again. And so they need, as a priority, figure out what they're going to use as money on this new island. And you have to suspend your disbelief slightly further. Despite being in rags, they can create whatever technological solution they want with any characteristics. And so given that freedom, they decide not just to create good money, but they decide to create the perfect money. But they have to decide what the characteristics of that perfect money is. And there's 7 things. So firstly, it has to be absolutely scarce. It has to have a fixed supply forever. And it needs to be costlessly and instantly verifiable by anybody at any point. And so if everybody can always verify the total amount of money, everyone can always be confident that no one's producing any extra for free. It needs to be portable. So it needs to be effortless to both store and move with negligible costs. It needs to be divisible. And the perfect money would be infinitely divisible. It needs to be durable. It can't decay or erode. It needs to last forever without deterioration. It needs to be fungible. So every piece is always the same as every other piece. It needs to be acceptable. Everyone everywhere needs to both be able to receive and send. And it has to be censorship resistant. You have to be able to hold it yourself. You must not require the permission of someone else, and no one should be able to stop you sending or receiving it. Now, clearly, these are the characteristics of perfect money, but then a disagreement arises. 2 leaders emerge from the population. One, Satoshi, he says, well, we all agree on these characteristics, and by definition, the characteristics, they're not going to change. So we lock those in and we move forward. Whereas Fiatello, he says, I get that and I agree, but what if there's an emergency? What if something requires that the people in charge make a change? Of course, it's very unlikely, but I think we should have the perfect money, but we should also have a big red button. And this big red button allows the people in charge to press it whenever they need to. Of course, they never will. But just in case, they can change any of the characteristics at any time of the money. Now, Satoshi cannot get on board with this, so he builds a massive wall right down the middle of this island. And on one side, they use Satoshis, perfect money always. And on the other side, they use Fiatellos, which is perfect money to begin with. Now, initially, both sides are functionally identical, just money by different names. But they're starting again. There isn't anything. Everybody is self-sufficient. Everybody's doing their own fishing for their food, cutting down their own trees for the firewood, building their own shelters. It's just about survival. And despite having perfect money, there is limited trading because people just don't have excess. There's no excess goods, excess time. But humans being humans, we're better at some things than others. We have different sets of skills, and we tend to gravitate towards the things that we're better at because we get fulfillment from being productive. So if you're better at fishing, you tend to focus on the fishing. If you're better at cutting down trees, you focus on wood cutting. And when you focus and when you specialize in areas that you're productive, you produce more in less time, and prices start to fall. You can supply your goods to other people at a lower price, a competitive price. And the output is better. The quality is higher because you're good at it. And the more you do something, the better you get and the higher the outcome. And so prices fall, quality goes up. But there's not just one woodcutter, there's not just one fisherman, there's lots. And they're all competing with each other to supply everybody else at the lowest cost with the highest quality. And now there's active trading. The fisherman can't build a house out of fish. The woodcutter can't eat wood. They have to trade with each other. So now you have active trading in this perfect money in a competitive environment where prices are falling and quality is going up. And what happens over time is that you get excess time and excess capital that's produced. The excess time allows people to innovate The woodcutter can take a step back, think about his processes, improve them further, drive a greater amount of output at a higher quality with the same amount of effort. Prices fall further, quality goes up higher. He can invest in other people. He can invest in the fishermen, allow the fishermen to build a boat, expand his supply, reach new specializations. And so what happens in a free market with perfect money is that prices go down forever and quality goes up forever. And so what do we see on both sides of the island is that the purchasing power of the money starts to increase. So 3% a year compounding for both sides of the island. The price of tomorrow is less than today, and it raises the quality of life for everybody on both sides of the island, even if they are not productive. Because you can keep your money, you can save your money, and it buys more tomorrow, not less. And so everybody benefits from the productivity of the actions of the individuals. And it's the money itself becoming more valuable over time. Until these guys come along. And now both sides of the island have grown enough that they elect a government. And it doesn't matter if it's left or right, because they're all the same when it comes to this. Now, however well run any government is, it will inevitably hit a deficit problem at some point in time where the amount it's spending is greater than the amount it's receiving in taxes. Now, this is normally due to mismanagement, but it could also be due to some external factors like natural events as such. Now, this is where we see the divergence. On one side, Satoshi only has two choices to balance this budget. He can either raise the taxes or he can cut the spending or some combination of the two. Whereas Fiatello, he has exactly the same choices, but he also has a big red button. And they're both up for re-election. And Fiatello knows that if he raises taxes or he cuts spending, it's going to cost him votes. So just this time, he's going to print a bit of extra Fiatellos for the government and not tell the population. And so the consequences, well, Satoshi can't hide the changes. He loses the election. Government size reduces, efficiency increases, but a better social sustainability is reached. Like, people realize there's no free money. Taxes need to equal spending. But importantly, prices continue to fall and quality continues to increase. Whereas for Fiatello, great news, gets re-elected and nothing's changed. The population aren't even aware. He thinks this is great. It is consequence-free. But something has now changed. He hits the big red button, he prints the extra Fiatellos for the government, and he debases the currency. So overnight, more Fiatellos have come into existence, whereas the total amount of goods and services in the economy remains unchanged. Now, this has three main impacts. The first is it's a distortion of price signals. The second is that business input costs increase. And the third is asset inflation. That first one, previously, the only reason any price would change is because of a change in demand or supply. Well, what's happened now is that Fiatello has printed extra Fiatellos and they've gone into the pocket of the government. They reach the economy when the government spends them with people connected to it. Now, when they spend it, this looks like demand. But it's not demand, it's just extra Fiatellos. But it starts to push up prices in the areas closely connected to the government, which is a signal to all the entrepreneurs, all the active capital across the whole economy, that there's a market inefficiency closer to the government, and it starts to attract active people, active capital closer and closer to the government, removing them from where they're currently competing for goods and services in the rest of the economy, undermining the quality. Starts to stop the prices falling in those areas of the economy, starts to stop the quality increasing as they become closer and closer to the government. Now, as those more profitable areas close to the government start spending these extra Fiatellos with other businesses, hiring people on raw material inputs, we start to see extra Fiatellos there pushing up those prices. But those things feed into the input costs of every business. And so we start to see a misallocation of capital, both human and real. Now, as the business input costs increase for everybody, from raw materials, humans, etc., it starts to squeeze the profit margins of every business, regardless of whether they're close to the government or not. And every business is run by a business owner. And that business owner is doing a constant calculation between risk and reward. It is not risk-free to run a business. You are taking on risk, and your reward is your profit margin. If the profit margin is not great enough, you close the business. You go work for someone else. So he starts to see businesses closing. For those that remain open, they now need to make a change. Every business now needs to find a way of re-establishing their profit margin. Not being greedy, re-establishing their profit margin because extra Fiatellos are printed. And they do this in one of three ways. You can, if you imagine a consumer product, you could say, well, my input costs have gone up, so I'm just going to pass that straight on to the consumer. The product is still the same size, same quality, it's now just 10% more expensive because my input costs have gone up. And so that's consumer price increases. This is visible inflation. Alternatively, you might say, well, I don't want to put the price up. I'm going to redesign the packet, and now it's 90 grams, not 100 grams. And maybe the consumer doesn't notice. Same price, same quality, just smaller. And quite often we don't notice. And this is shrinkflation, semi-visible inflation. And the third way is to try and find some way to force your input costs back down again by changing something about the product. Now this would be same size, same quality, same price, quality changes. Now all of this is where consumer inflation comes from. And it's the only source of consumer inflation is the money printer. And it's three forms: visible, semi-visible, and hidden. Now those first two, they both reduce the affordability for the population, because now either the population's paying more for the same thing, or they're paying the same and getting less, which means they need to buy more of it just to fulfill their needs. So it makes the consumer poorer. If instead the business tries to reduce the cost, the easiest way to do it is just by firing people. So Fiatello starts to see an increase in unemployment across the population. And guess what? It causes a problem for Fiatello to deal with. How does he then support all these recently unemployed people? But the more insidious one is the one that we tend not to see, which is the input quality starts to go down. So the goods and services start to deteriorate. That product that used to last 2 years now only lasts 1 year. It looks the same, it just breaks sooner. You have to buy it again. That's absolutely still inflation. It's massive inflation. It's just not captured in any inflation statistics. But what about the things that you consume once, like food? He starts to see a deterioration in the quality of his food. The fresh ingredients are increasingly replaced with industrialized sludge. Drives a health crisis. He sees a rise in obesity across his population. People get sick. They become less productive. Puts more pressure on the government to deal with these recently sick people, and further undermines the productivity of the economy. Now, the third one is asset inflation. So he thinks he's solved economics here. It's like, I hit the big red button and all the asset prices go up. The asset prices are only going up because you've printed extra Fiatellos. If you double the amount of Fiatellos in the system overnight, everything is worth twice as much when measured in Fiatellos. So all the house prices start going up. The stock market starts going up. All the speculative assets start going up. And he thinks this is amazing, everyone's getting richer. But they're not. The people who own the assets, they appear to be getting richer. The people who don't own the assets are getting left behind. And so he starts to see a wealth inequality appear across the economy. Now, the people who don't own the assets are also the ones suffering the most under reduced affordability from the cost of living and getting passed on by the businesses directly as a result of the money printer. And because the house prices are going up, the rent is going up, so more people are finding themselves homeless at a time when they're squeezed as well in their pockets. Yeah, more pressure on the government. How do we deal with all this homelessness? And then second, it's not just houses that are going up. It's everything. It's speculative assets. It becomes the prevailing wisdom in the population that you have to be invested. If you put money in the bank or you sit on it, it just melts away. You've got to speculate with it to protect it. And once you have speculation and once you have increasing house prices, everybody has to now take out more and more debt just to try and participate, just to try and protect what they have, just to buy a house. And so you get debt at this consumer level, the company level, the state level. And so now it's impossible for a family to buy a house on one salary. They're squeezed in their cost of living. They have to take out a huge amount of debt to buy a house. And you can't do that on one salary. You need both parents working. But now both parents are working, you start to see the breakdown of the nuclear family. They are spending less time together. There's more stresses at home. You have fewer children. There's less time for children. The economic calculation no longer works. We cannot have a roof over our head, food in our stomachs, and all the children we want. Something has to give. And the declining birth rates start to mean that Fiatellos' pension system is on the verge of collapse. The older populations are living longer. There's fewer children being born. The children being born don't have the opportunities their parents did because they own all the assets. They're paying less taxes. And he suddenly realizes, how am I going to keep all the promises I made to these older generations about when they can retire? And the quality of life they'll have in their retirement. And so he has to start moving the goalposts. He pushes back the retirement age. He reduces the benefits he promised them in retirement. He starts increasing the tax rates on everybody. Now, many people are not at the point in their life where they're looking to buy a house or have families, they're renting. But for them, it becomes very hard to put down roots because you can't rent a house for 3 years or 5 years now. You can't make long-term plans. You have to think about 1 year, maybe 2 years, because the rent's going up so much every year. And you're not making the progress at work that you expected to make because people are not retiring and moving on. And so what happens is you start to prioritize today, not tomorrow. You see the house prices running away from you. You think, well, if I need to buy a house, it's going to take a massive amount of debt. My salary is not very big. If I put money in the bank, it melts. So what's the point in saving? I'll live my best life. I'll go on holiday. I'll enjoy myself. I'll prioritize short-term thinking, not long-term thinking. I have much less of a stake in society for the long run. And there are people who are worse off than this, where they're struggling with hopelessness. They're on a treadmill of decline, struggling to feed themselves and their families, home themselves and their families on a daily basis. And that leads to destructive behavior, addiction, worse, drives further health crisis. And it's a mental health crisis for everybody in the population. All of these things putting more pressure on the government. And Fiatello realizes that actually now he's got a myriad of secondary issues that people are looking to the government to solve. And so he has to allocate more capital back into the market to try and solve them, which is a greater misallocation of capital. And between the misallocation of capital and the increased leverage in the economy, it sows the seeds of the next emergency. And when something goes wrong, he has only one option. He's got to press the big red button again. And now he realizes this maybe wasn't consequence-free. But now he's lurching from crisis to bigger crisis. He hits the big red button, he debases the currency, and he creates a bigger government. And now he sees that the government's actually spawned a set of parasitic industries attached to it, where the government becomes dependent on these industries, deeply intertwined, to try and keep the show on the road, to try and deal with all these secondary issues because they can't deal with it themselves. And it becomes clear to the population that the government is increasingly protective over those industries, over and above the population rather than the other way around. It becomes very unclear where the government ends and these industries begin. You have big pharma are increasingly treating the symptoms, not the causes of the health crisis, never really incentivized to heal people. Because a healthy customer is a lost customer. You have big food pushing more and more food centralization and lower standards. You have the military-industrial complex pushing for ever greater spend on defense, both at home and on foreign shores. Wall Street leveraged to the eyeballs, to the point where the government cannot let Wall Street fail, because if the banks go bust, the depositors lose their money, the government falls. And so Fiatello's government starts to pre-socialize the losses. He creates deposit insurance, which everybody gets for free out the gate from the banks. Allows greater risk-taking from the banks, a greater chance of future bailouts required. And the government itself goes and makes a set of unproductive investments driven by any political ideology they may have at any point in time, regardless of the logical qualities of it or not. And all of this, he realizes it's not free market capitalism anymore. It's crony corporatism. And what happens over time is the media gets captured because the government is increasingly shaky. It knows the problems are spiraling out of hand. It has to clamp down on misinformation or disinformation or people holding an opinion which is in any way divergent from the official narratives. And the media companies themselves, the greatest revenue generators for them, tend to be the companies, those industries attached to the government. And they don't want to upset their advertisers. So you get a very complicit media base. And when you have a captured media, a military-industrial complex fermenting strife on foreign shores, you get the creation of the forever wars. And what tends to happen is the Fiatello population are supportive of them at the start. Because all they see in the media is, we've got to do this because it's the right thing to do. And when you have the forever wars, the banking system bailouts and the excessive debt, it just sows the seeds of the next emergency. But this time it's just so much bigger. He has no choice. He's got to press the big red button again. But this time there's a massive erosion of trust. And every time this happens, more and more people are waking up. And it goes round and round until something breaks. And he's getting very worried. So what's happening to the money? Well, the Fiatellos aren't going up in purchasing power every year by 3%. Now they're melting. He's printing so much and he's destroyed the productivity gains that were coming from the free market accruing to the money. Now it's losing 7% a year. And so what's happened? You're going to struggle at the back, I think. What's happened to the Fiatello Island population? Well, the poor who are on fixed wages, low income security and own no assets, they cannot win. They just get poorer every year. The middle earners, who are not the first to be fired, they have mixed income security, have a home quite often and maybe some assets. They see their homes go up in value, but they can never monetize them because you can't sell your home. You've got to live somewhere. Sell one home, you've got to buy another home. You might feel richer, but you're not. They are becoming the new poor. Well, surely the business owners, the wealthy, they're doing well. Income from asset yields, high income security, broad asset ownership. On paper, it looks like they're doing well. It looks like they're getting wealthier, but they're actually getting poorer because they're measuring their wealth in Fiatellos. And as he prints Fiatellos, their assets are worth more, but it under indexes versus the amount of Fiatellos he's printing, because whenever the assets go up and they sell them, you've got to pay the tax. So the government gets to steal a portion of that gain back. For them, it is death by 1,000 cuts. Now, the only segment doing well are the politically connected. Those that are government funded, they're fully insulated from an income security, and perversely, their income expands and becomes more secure the worse society does. It's industrialized theft at this point. But now so much time has passed that the wall down the middle of the island starts to crack. And for the first time, they can trade and communicate across the wall. And so what happens? Well, the Fiatello population, they see their money melting. And they see what happens on the Satoshi side of the island. And it's very clear that people don't want the Fiatellos. They don't even want to be on that side of the wall. So this sums it up. On a Fiatello standard, your money is stealing from you. Whereas on a Satoshi standard, the whole world is working 24/7 to increase your purchasing power. But now the escape valve is open because there's a hole in the wall. It's the Fiatello population, they realize they can't save in Fiatellos. So they start selling their Fiatellos for Satoshis, which makes the Fiatellos decline further in value, triggering yet more budgetary and currency crises for Fiatello to deal with. And he has to press the big red button again. But now printing money is not enough because there's a leak in the system. The more he prints, the more goes out through the wall. And so he has to change something else. He has to change the censorship-resistant nature of the money. He suddenly decrees, you can't hold it yourself anymore. You need to put it in the banks. The banks are going to protect you. They're going to check every transaction to keep you safe. He'll put friction in the banking sector. Oh, you're not allowed to buy this, you're not allowed to buy that. He might block you buying Satoshis completely. But people and capital always find a way, and the cycle continues at a slower pace. But the key thing is it's the money and it's the people that leave. You cannot build a house on sand. You cannot build a life on sand. So the most productive, active people start leaving Fiatello's side of the island and escaping to the Satoshi's side. And so where does it end? Well, one of four things. If he's lucky, sustained inflation, maybe hyperinflation. But you can only steal so much from people for so long before something breaks. There'll definitely be asset seizures. One day he'll decree, we're all in it together. And assets that are held by all the banks will just be swept into the coffers of the government. Exactly like what happened in Cyprus in 2013. So if you held over 100,000 euros in the bank overnight, 45% was taken by the government to bail out the banks and the government from their own mismanagement. Also happened in the US. Not much talked about now. Not really in keeping with the US ethos, but they made gold illegal in 1933. So if you were caught with over $100 worth of gold, it was a $10,000 fine or 10 years in prison. And they centralized all the gold, and they gave you dollars by handing it in and immediately devalued the dollars. So this happens, and it will happen again. It's politically extreme outcomes. People don't understand what's happened. When he's printed the extra Fiatellos, he's ended up with a cascading system of more and more problems where the only solution is more government involvement, which creates more problems, which requires more government involvement. And so the population start looking to the government for everything. They vote for more control, more centralization, and eventually you get to a point where you can't vote yourself out of that. Or something worse. But in all of those scenarios, people want the Satoshis, they don't want the Fiatellos. Right, so if we go back to the 7 characteristics of perfect money, he only changed 2 of them. And look where we ended up. Oh, this isn't going to be a reveal for you guys. But the US dollar is just a terrible version of the Fiatello. It's thoroughly compromised, corrupted on those same 2 measures, and it's compromised on the rest. And the US has a major Fiatello problem. This is their final budget for 2025. They had a 2 trillion deficit on 6 trillion of spend. In a single year, you'd have to double the taxes, the income taxes for everybody in the US to try and balance that. And you had the most productive man in the world spend the first 6 months of last year trying to fix this. Elon Musk was tasked with balancing the budget, given full access to everything. Not only couldn't he balance the budget, he couldn't even reduce it. It's worse than it was. There is no way out. And many of you will have seen this chart before, but this is the chart of the US money supply and the US national debt. The national debt in blue, money supply in red, and 1971 is marked on there when the US unilaterally came off the gold standard. And then every country in the world followed. But effectively, we're at the point now where the US can print as much money as it wants, as many dollars as it wants to satisfy its own needs. And to be 38 trillion in debt, be losing 2 trillion a year, and then owe another 50 to 200 trillion in the future of commitments you've made for Social Security, Medicare, Medicaid. It means that the only way out is just more money printing, because you cannot fix that. And so the money printer is systematically destroying the US dollar's purchasing power. But the US dollar is the best we have. Everything else is just so much worse. This is the change in every currency versus the dollar over the last 10 years. Many currencies have ceased to exist completely. If you were in Venezuela, Sudan, Syria, Argentina, Turkey, Suriname, Angola, you've lost 90% of your purchasing power just versus the dollar over the last 10 years. And the dollar's already itself lost a chunk of its purchasing power versus the real world. People who have tried to store their economic output in these currencies have been destroyed. And so the unfortunate reality, as Lynn Alden always says, like nothing stops this train. There is no way out at all for governments here. The only thing we have in the future is more money printing. And so the conclusion is the history of government management of money has, except for a few short happy periods, been one of incessant fraud and deception. A quote from Hayek. All right, so what's the solution? It'd be pretty bleak if there wasn't one. Right. But thankfully there is. Yeah. There's only one solution, and that's the separation of money and state. And so if we can remove the money from the hands of the state, if we can remove that big red button, we can fix the money. And if we fix the money, we can fix the world. And the solution is, of course, Bitcoin. So, thank you very much.